Sarah Ibrahim is getting worried. She took out a $1.5 million home loan with her partner to buy their house in Sydney. When their fixed rate ends in January, they'll be paying $20,000 a year more on their mortgage.
I have to say that has been really anxiety-inducing to think that that interest rates could go up by that much and that we would have to try to weather such a large increase.
Financial counsellors are already reporting an uptick in banks trying to repossess homes because owners have missed mortgage repayments.
We're seeing clients come to us with a whole range of legal, emotional, financial issues, and we are calling on the banks to take a compassionate approach to this real tsunami of homeowners who are finding themselves at real risk of homelessness.
At this small legal advice centre in Melbourne, 60 people have asked for help with mortgage stress in the past 2 months.
Critically, we are calling on the banks to use eviction as a means of last resort to enforce the debts owed to them.
Nearly $9 billion of home loans belong to borrowers who are 30 to 89 days overdue on their repayments. That's slightly up from the end of last year. Just over $300 million worth of properties have been repossessed, less than half the amount in the same period before the pandemic. Financial counsellors think that more people will default on their home loans as variable rates are heading above 5% and many will come off fixed rates as soon as next year.
For every percentage point increase in interest rates, that will mean more and more people will experience financial stress, and the larger that group of people, the bigger that reverberates through the whole of the economy.
The Reserve Bank had previously said that interest rates wouldn't rise until 2024, but with the cost of living expected to hit 7% this year, the central bank has indicated that it will keep increasing rates until it can get inflation within its target band of 2 to 3%.
The RBA, they've backpedaled, so interest rates are rising far higher, far earlier than that. I think households do have a case to be disappointed.
Economists say if the RBA raises rates too hard and too fast, many Australians will face hardship.
That leads to an increase in defaults and a really aggressive downturn in the housing market, and I think that does threaten the financial system to some degree.
Good girl.
Ms Ibrahim says regulators and lenders have an obligation to Australians to ensure they don't take on too much debt.
The last thing I want to think about is, any kind of decisions, really tough decisions about leaving the market, because we know how hard it is to get in.
Like many others, she'll be fighting to keep up with the cost of living while trying to hold on to the family home.